Whoever you're doing it for, we'll help you get it done. Simply. That's Africanacity. That's Absa.
Shop online, get free swipes, and enjoy greater security with a card that turns banking on its head. That's Africanacity. That's Absa.
Signing up for an Absa Flexi account gives you better control of your money with benefits that will let you be in charge of your finances. Great benefits such as no more monthly fees, as you can now pay as you transact. Fixed low interest rates on unsecured personal loans, plus you can enjoy great rewards when you use your Vertical Absa card. To sign up for an Absa Flexi account, simply visit your nearest Absa branch, making sure you bring your national ID, and we'll sign you up for your Absa Flexi account, allowing you to start taking control of your money and your life.
Whoever you're doing it for, we'll help you get it done. Simply. That's Africanacity. That's Absa.
Shop online, get free swipes, and enjoy greater security with a card that turns banking on its head. That's Africanacity. That's Absa.
Please make those payments and take dinner out the freezer. Enjoy your day.
Morning, ladies and gentlemen. I always expect response. Thank you. Thank you so much for being with us this morning. Thank you so much for keeping and for showing up in large numbers. We're here today to announce our financial results for 2021, and I want to be commenting on the people that are so excited to share the news. But before we do, please allow me to begin by introducing members of the management team that are present. I will start off I have to look at my hands to the left and the right. David, I'll start with you. David Wandera, he's ED and Head of Financial Markets. David, stand up and face the fourth estate. I'll move to the extreme right. That's Michael Seguaya. I'm sure you all know him. He's the CFO and also ED, one of the people that will be in the hot seat today. Behind Michael, we have Albert. Albert is our Business Banking Director. And next to Michael, we have Herbert. Herbert is our Head of IT and Operations. Then Musa Diallo is our Retail Banking Director. We've decided not to clap, so I'll ask you to clap at the end anyway. And next to Musa is Edward Ochen. He's our legal counsel and also board secretariat. We're supposed to be more. I saw Susan somewhere. And our head of risk. So the members that are present today. Guy Wago. He's around somewhere. I guess he must be catching up on breakfast, but the questions will find him when the moment arrives. So without wasting so much time, I want to remind you that we are streaming live on Twitter, Facebook, and YouTube. Follow us there. Of course, for the colleagues, we are live on MS Teams. I would now like to take this opportunity to invite our board chair, Max, and also
members present. We have executive members already have the managing director, Kalifung, and also Michael, who has been in. Have one now. So, present management. Members of the press, 9 ladies and on behalf of Absa Uganda, welcoming you all. 20. Thank you for us. As you're all aware, 2021 was a story of two halves. First half being characterized by unprecedented certainty and imaginable loss of lives and livelihoods. And this affected the world and the country. Now, as Absa, we did not. But having said that, family and friends were greatly impacted. This devastating. So we are grateful that we were able to be. And then we go into the second half. Actually, second wave, the worst time was about June. And but by the end of it, had good. We're looking signaled a good recovery. That will be our numbers. Because primarily we had access to vaccines, we accepted vaccine. There was a lot of resistance. All of us as we, and ultimately, virus spread. And so, staff at Absa, prior to those tough circumstances, worked so hard. Times were extraordinary, but they responded. Ordinary committee, execute, get them. And in a special way, thank her and team. Thank you for delivering. And I believe that this sort of culture developed the challenge. The reason is realization of ambition, creating shared value for our stakeholders. Also, at this point, I want to thank customers who have sailed with us, been with us through the sailing times and turbulent times. That loyalty, we had the support of the category, us doing. The financial performance, as you shall see from Managing Director, Michael, improved greatly. I'm not going into the details. I would be emptying what Michael are going to talk about. But you'll see that along all the parameters, I think also it's key to know that we maintained very stable, sound control environment by combining assurance of effective for internal financial complying with the regulators. As a customer, I don't think I'm happy to place money with the bank and then find it. So it's very fundamental for us to have a control, right? And we did that. I think also something that is emerging in some cases, but also very key, a very high risk I'd like to talk about in the financial services. Financial and cybercrime remain one of the highest risk services sector, and we are committed to fight it. We recognize that we cannot, or even as a sovereign. Therefore, because we cannot have patterns with regulators, bankers, Uganda Bankers Association, there are either other great awareness on sector of business, our clients, and especially emerging tech had a good planning, learned things have imagined, the pandemic, working group, borrowing money on our phones or transactions online. So that is sensitive. It's a world business as usual. Therefore, we feel that it's very important for us to emphasize and try and protect our business and our clients by partnering with other sectors to make sure that we manage the financial crime. Also, key to note is we are a force for good at Absa. We believe in creating shared value, and we have vested interest in creating inclusive growth and delivering financial services and products in a socially and environmentally responsible manner. Under our citizenship agenda, and we played our role towards strengthening the national response to COVID-19 pandemic through both humanitarian and business support. So in terms of humanitarian, we supplied medical, that was the cylinders, actually the gas cylinders. You recall how the country was running short of oxygen at some point in time. And so we supplied medical grade oxygen to regional referral hospitals across the country to meet the high demand for oxygen therapy. Further, we also continue to provide relief to our clients through credit lines for those who wanted it. It was a tough time, the cash flows were not coming, but they had to be understanding, from the service providers like ourselves to make sure that we support our clients during that time. We also donated computers to the National Library. I think in total about 50 we supplied in the country. We also gave computers to Baylor College. I think that is based in Malago Hospital, and specifically for children health. So that is few of the things we have done, and we shall continue to do that. Now, allow me to comment on board, on specific board updates. We welcomed 3 new independent board directors. One of them is Ms. Sophie Nkutu. She's a fellow of the Chartered Certified Accountants. She's got experience over 20 years working in banking and professional service sectors. We also brought on board Mr. Philip Harriker. He's an arbitrator and commercial lawyer with extensive experience in commercial law, dispute resolution, and arbitration. He has advised many clients in different industries, both in Africa and in Europe, and a bit of US. We also brought on board Mr. Alex Rugamba. He's a civil engineer by profession, but spent most of his time in international development banking. He has spent most of his time working in senior executive roles at ADB. So the three new independent executive directors, non-executive directors, all have board experience. So they sit on a couple of boards, and so we are privileged to have that value coming to the board. Of course, we still remain with, was an addition to the existing boards. One of them is an independent board member, Mr. George Opio. He's also a chartered accountant with a lot of experience in one of the top 4 auditing firms in the world. He's not here with us today. We also have another lady, she's based in South Africa, Ina, with a lot of banking experience and also board experience. Also in the year, we welcomed an executive director, already presented to you, David Wandera. He also comes on the board. He came on the board this year. So with a wealth of experience from the four directors, will benefit as a board. And on this note, I'd like to thank the board members, and particularly the independent directors, for their continued leadership and resolute support to the bank and its employees. They're always available for guidance and counsel, and their contribution holds the bank to the highest governance and compliance standards. When we're identifying the board members, we go through a rigorous exercise, and so we are very, very confident of the people we bring on board. And looking ahead, there is positive sentiment in the market. I'm sure all of you can feel it. You can walk around to any place now. You can go without a mask. So as a result of that, the economy has opened up. The businesses are functioning. The nightlife is active. Transport is good. We're seeing the economy growing faster than expected, and I think the forecast in the this year, about over 6%. So all is looking good. We are seeing borders opening, and therefore trade is going to be promoted. We are seeing the East African region expanding with admission of DRC, so that's also promotion of trade. So we're healthy. The vaccination campaign continues, and therefore, with a healthy population, with support from banks, especially like Absa, who want to realize, you getting better, to realize your possibilities of generating income and, in a sustainable fashion, we can see that it's all positive. And therefore, with that, I believe that, and of course, I can't forget to mention the loyal customers we have. We depend on you for the businesses we generate. So I believe that with what I have already mentioned, our business is well positioned to deliver value to our stakeholders, even in 2022 and the years ahead. This will be done through pursuing growth selectively. We also believe in enhancing our customer experience, and as it's a common thing, digitalization. But also, most importantly, like I said earlier, our staff have been fantastic, and they're the biggest asset for the bank. Therefore, we'll continue to develop our staff so that they can be ready for the challenges, they can be fit for the future. In conclusion, I once again want to convey my sincere thanks to our valued customers, to the dedicated staff of the bank, and all the stakeholders for the trust you have bestowed upon the Absa brand, value during this time. Without their support, the bank would not have achieved the solid financial results you're going to see, and in a sustainable and sustain the growth in challenging operating environment. This growth has been over the years. So without saying anything further, because now I can end up going into financials, which is not what I'm because it's exciting, it's not what I'm supposed to say. So I thank you for listening to me. So over to you, Mumba.
Another round of applause to our board chair. Thank you so much, Nadine, for setting the pace. I think we're now ready for Mumba and Michael to take the hot seats. I believe today they're not very hot, but we'll see. So Michael and Mumba, please take your seats. And then you'll take us through the next session. Thank you.
Madam Chair, Mrs. Nadine Rugaba, members of the board present, we recognize the presence of Professor Nawangwe, one of our independent directors, members of the Absa Uganda Country Management Committee present, members of the press, our online audience, ladies and gentlemen, good morning.
Morning.
I think my accent is improving. Mwasuzi Mutia. I am pleased to say that over the past 2 years, I am getting to know and meet a number of you. And without disregard to any that I may not have penned down in my notes, a few people like Martin Luther. Are you around, Martin? Ah, there you are. You know, when I single him out, you know that he causes me a lot of pain, so I'm trying to pacify him, right? Yeah. Other members of the press present, dear colleagues and members of the Fourth Estate, we welcome you to this briefing and thank you for your valued contribution and support over the years as we continue to drive the Absa brand forward. I'd like to appreciate your continued support and look forward to even more interactions of this nature, including the ones we have had in the past and in the future. As mentioned by our Director of Programs, we are here today to discuss the financial performance of Absa Bank Uganda for the year ended 31st December 2021, and also to share some insights on the progress that we are making on our strategic deliverables. As our chairman alluded to, I think we are extremely proud as a leadership and as a brand in terms of what we have been able to achieve under not so easy circumstances, unusual to a certain extent, but what has been referred to nowadays as the new normal. In terms of financial performance, I am pleased to report that the bank is in a very stable condition and is growing year on year. The key highlights for the year 2021 are that we remained profitable and posted a profit after tax of 110 billion Ugandan shillings. This represented a growth in profitability against the year 2020 of 169%. And also represents a growth against the year 2019 of 43%. So on all accounts, versus a normalized year and unusual year, we have been able to deliver a growth in profitability, which is really commendable, and all due credit goes to our customers and colleagues that work for Absa Bank Uganda. Some of the growth parameters that will be reflected, and Michael will give further detail as he gives the presentation, are that we achieved a growth in revenue by 15.4% to 365 billion in 2021, maintaining a 3-year cumulative average growth of 4.4%. Our customer deposits grew by 2.7% to end the year at 2.4 trillion Ugandan shillings, maintaining a 3-year cumulative average growth rate of 10.6%. We realized an overall growth in our total assets of 13.1% on a year-on-year basis, and this was largely on account of an increase in investment in securities that was supported by strong deposit mobilization across our customer segments. Overall, we also realized a 21.6% growth in our equity. That reflects that the bank is solid and stable and well positioned to drive growth going forward. Overall, our net customers' assets closed at a total of 1.3 trillion and were marginally up by 0.1%, which can be attributed to weak credit demand caused by the adverse effects of the pandemic. However, we do remain optimistic that recovery is on the horizon, as witnessed by the growth that we saw from an overall banking sector for the quarter ended 31st December 2021. Principally, it was a year during which we applied our refreshed strategy and renewed strategy that would enable us to adapt and grow through volatility, uncertainty, chaos, and adversity. In terms of some of the factors that we can attribute to our growth, I think, as you may all be aware, as a country, we have been posting very strong macroeconomic indicators or outcomes as a consequence of the resilience of the economy that has been able to sustain the challenges Apologies for that. I think in sharing with you a few highlights in terms of the what drove the performance, ultimately, as you may all remember, the country went through the second wave of the pandemic, which left devastating effects in its wake. Despite this, our economy delivered remarkably resilient performance in 2021, expanding at an estimated 5.3% according to our research, but the central bank puts the growth for the financial year 2021 at over 6%, which I think was a remarkable outcome in as far as the economic performance is concerned. You will note that from a macro perspective, we did produce resilient results from a GDP perspective on a fiscal year basis, growing 3.4% year on year, against an average of 4.1% in the East African community. On the exchange rate front, we were generally stable and showed strength and positive growth or sustainability of the exchange rate relative to other currencies on the continent. Inflation remains generally within the 5%, under the 5% range bound, and we did not see an escalation in prices significantly during 2021, although going into 2022, statistics are beginning to show an upward tick in terms of prices. Ultimately, overall, inflation rates remained generally stable during 2021. As I indicated earlier, the sound economic environment did contribute quite effectively in terms of stimulating our growth. And as an institution, our key focus was on supporting our customers through tough times. And this we achieved by ensuring that we took on board the credit relief measures that were prescribed by the central bank and other concessions that we could provide to our customers as a way of supporting them through the crisis. And I am pleased to say that we continue to support the clients in distressed sectors such as education and tourism for an extended period up to 30th September 2022. That's the correct date right there. You will note in our financial performance that we were able to drive our credit losses downwards from 4.2 in 2020 to 0.9%. And this was through sustained customer engagement and support, mainly done through our financial and business advisory services that we do provide to our customers on a personalized basis to help them regain and improve their ability to meet their credit obligations. We are grateful to our customers for their unwavering confidence and for continuing to do business with us as their banking partner of choice. You heard our chairman refer to the greatest asset that we have as an institution, and that is our people. Our people focused on increasing productivity. As we say in Absa, our people are our strength, and we specifically invested in human capital development to deliver enhanced staff productivity, which paid off greatly and is testament in the results that we shall be sharing with you today. It's always an honor to be recognized for the effort we put into our operations, initiatives, and development of our people. And as you are aware, last year or this year, we were recognized as having the best practices in learning and development at the inaugural Prudential Best Human Resource Practices Awards for 2021, which recognizes organizations that have showcased outstanding human resource practices. I think that deserves a round of applause. In terms of another attribute that drove our performance is around digital adoption and product innovation. Over the past one year or 12 to 24 months, we have made significant strides towards the realization of our ambition to become a digitally led bank. We have prioritized investment in innovation as we seek to leverage the strength of digital technology to create seamless experiences for our customers. We have witnessed increased adoption and customer preference for digital usage across our customer segments, including retail and personal banking, business banking, and corporate banking. By December 2022, we had 783 agency banking outlets across the country, which registered a 32% growth in transactions off this platform alone on a year-on-year basis. Our digital utilization currently stands at 83% transactions performed out of branch of total services delivered. The previous slide, please. Lending to key economic sectors remains a key aspect of our strategy, and we remain committed to ensuring that as we drive a sector-led strategy, we will continue to promote industries that are in sectors that drive the Ugandan economy. Sorry, the previous slide. Throughout 2021, despite the challenges and slowdown generally in activity or credit demand, we did continue to extend credit to key sectors that drive economic growth through private sector credit, as reflected on our loan book. Most notably, we extended credit to the construction and real estate sectors, agriculture, manufacturing, and trade of close to 1 trillion Ugandan shillings throughout the year. And that is reflected in the growth of our NII, or net interest income, due to the average growth in loans that we experienced throughout 2021. As we deliver on our financial targets and our business strategy, we remain committed to providing sustainability to deliver shared value. As our chairman alluded to, we remained committed to delivering sustainable growth within the communities in which we operate for long-term value creation. We will continue to play a leading role in the 4 priority areas as identified under our citizenship agenda, namely education and skills development, inclusive financing, promoting a just society, and environmental sustainability. Those are the 4 pillars that inform our citizenship agenda. Under our citizenship agenda, we played our part, as earlier alluded to by our chair, in terms of our response towards strengthening the national COVID response support in 2021 through both humanitarian and business support. We did contribute towards strengthening the national response to the pandemic by purchasing oxygen cylinders, which our chair alluded to boost medical oxygen supplies, which at some point in time were a critical commodity in terms of preserving the lives of our citizens. We also extended support to our customers to enable them to weather the aftershocks, as I indicated earlier, as a consequence of the pandemic. This yielded positive results as we continue to witness customers' increased ability to meet their credit obligations. On an overall basis, as we continue to navigate the uncertain terrain in the environment, we remain committed to providing our customers with services that are relevant to bringing their possibilities to life, and tailor-made solutions that align with the strategic objectives that each of the individuals and entities deal in as we drive our ambition of growing sustainably in selected areas of the economy. My colleague, Michael Seguya, will now present you with a deeper review of our balance sheet and financial performance for 2021. I thank you for your attention.
Thank you very much, Mumba. Good morning, colleagues. Good morning, ladies and gentlemen. I'm very honored to present the results of Absa 2021. Very fantastic results, I should say. From what Mumba and the chair alluded to, these are good results amidst the circumstances, and I'll dive straight into it. So we got a very good performance on our income. We've delivered 15.4% growth in 2021. That's amounting to 365 billion shillings. So fundamentally, what we have seen is that customers have trusted us with deposits. We've also seen the economy open up, and as a result, have been able to see more transaction banking. Customers have also taken more risk in terms of ensuring that they can invest further. That is more or less driving that growth, and it's driven both in non-funded income and the interest income. On the cost side, we remained flat year on year, mainly driven by the fact that when we invested in the new brand, that was 2019, we did spend quite a lot of money. That ramped up into 2020, still investing in the brand based on what you can see. And we can clearly see the results come through in terms of the performance. So we've seen most of those separation costs reduce as we moved into 2021. But better still, we had some better cost management that gave us the kind of results that we are providing, we are sharing today. Impairment. Impairment is a good story. Last year, I think we came through talking about very high impairment numbers, non-performing loans going up, which was a reflection of what was happening to the economy then. COVID came through and quite a number of businesses struggled. And Absa, being prudent as it were, we had to ensure that we provide whatever risk we are taking through. We had to take on impairment, hence that spike you're seeing in 2020. However, we have seen very good traction in that area. The economy is generally stabilizing, businesses are coming up, and with the whole opening up of the economy, we have seen impairment down by 78%. That has fundamentally driven our profit after tax to 110 billion shillings. And I should say these are phenomenal results. It's the first time we are delivering above 100 billion, clearly showing the trajectory we are taking. And I'm anticipating, there are a few results that are yet to be published by the other banks, but I do anticipate we shall be the number 3 bank in terms of profitability, and I think that deserves a hand clap. So generally, if you look at our profitability numbers, we have shown a CAGR of 12%, which is way above the GDP growth. So clearly showing that our investment in the brand is really yielding the great results, and we're on the good trajectory to ensure that we deliver better for our customer, we deliver better for our shareholder, and that's highly reflected in the results. From a net customer and loans perspective, I think this is a reflection of the level of demand our customers had in the season. We all know that the first half of 2021 was partly driven by a lockdown. So a number of our customers were still making decisions in terms of investment. As a result, we just saw a 0.1% growth in our net loans. However, the key, and I think the bigger factor, is the fact that from a 3-year CAGR, we are talking about 3.6% growth. Clearly showing that amidst the COVID season, we still continue to see good growth in this area. We are still lending out money, and customers are still demanding growth, even as we come through the COVID season. On the customer deposit side, very good trajectory, CAGR of 10% year on year throughout the COVID season to a 2.4 trillion shillings in terms of deposits. I think the key message here is the brand. The customers have appreciated the brand. We're able to see them trust us with more deposits. And as a result, we did see that growth of 2.7% in 2021. And we continue to see more in terms of the channels that Mumba has alluded to, the ATMs first being on pause, generally showing the transactions being appreciated, the channels being appreciated by our customers, hence the growth in customer deposits. Okay. So the next slide is really about ratios, key performance ratios. And the key message here is we have a very strong capital position. If you look at our capital, it has remained in the double digit, 24%, vis-a-vis a regulatory expectation of 15%, including the buffers, which is clearly showing that, you know, we are 80, close to 100%, way above what is required by the central bank. So we are a source of strength, and we are ready to take on the opportunities that the economy is going to bring across. So in terms of capital, very good performance in that area. That is also reflected in our return on equity, 18%. We are moving from 8% last year to twice as much, close to 19% return on equity, which is a very good message in terms of what we are doing in trying to improve the business, and it's a good reflection of the financial performance we are highlighting today. The next ratio there is cost-income ratio. It's really to reflect how much money are you actually making vis-a-vis how much do you spend to make this kind of money? And that ratio, the fact that it's going down shows that we are being more efficient. The investment we made in the brand is now paying off. Clearly, customers are appreciating the new brand, the new channels that we brought through, the fact that we brought quite a number of digital enhancements that have been able to see better transactions come through, and as a result, better income that has reflected through the cost-to-income ratio, moving from 67% to 58%. The last one is the loan loss rate, and I think we had quite a number of discussions last year in terms of our non-performing assets. I'm happy to report that this has greatly improved. We less than 1% this year. It's clear a reflection that when the economy opened up, we're able to see more businesses resurrect, and as a result, a better performance in terms of the quality of the credit. The last slide that we have is talking about rates, and I know there are discussions around rates and what has been happening. So generally, the CBR has been going down across the years. I am happy to report that we have been aligning and making the necessary adjustments towards CBR to be reflected in our Uganda shilling prime lending rate. And if you see that kind of corresponded, it shows our emphasis in ensuring that our customer will continue to enjoy good rates that are aligned to the changes that are happening in the economy. I think, yeah, that deserves a hand clap. Thank you. I would like to end here and hand over to Mumba, but really just to show, to thank you for your support. I think as the media, we do appreciate the support that you have given in trying to ensure that we get these kind of results. Thank you very much.
Thank you. Thank you very much, Michael, for that elaborate presentation. And I do hope that has provided some context in terms of the drivers of our financial performance for the year 2021. In terms of outlook and going forward and overall prospects for 2021, the current economic indicators in the Central Bank policy statement for February 2022 project a GDP growth rate of 6%, driven by a rebound in domestic demand, thanks to the full reopening of the economy, private and public investments in the oil sector, and full recovery of the services sector. The risks to growth outlook still exists, and recovery could still be hindered by new waves of COVID-19. I think you may have read in the press that China is currently going through another wave. How that evolves into the rest of the continent remains your guess as good as mine, but just emphasizes the need for us to remain vigilant as the West is not yet past us, though commending the response that our government has had and the measures of the vaccination drives that have been implemented. Tighter global financial conditions, volatile weather conditions, high inflation rates, elevated debt burdens, and fiscal consolidation are but some of the key risks that we continue to see on the horizon. The Russia-Ukraine crisis that is bordering on increased wheat prices, disruption to oil supplies, are yet another aspect or factor to keep at the back of our minds as we go forward in 2022. At Absa, we intend to maintain a single-minded obsession with our customers in 2022 as we continue to implement our refreshed strategy, whose sole mission is supporting shared growth. And that shared growth is about our growth and that of our customers, but most importantly, that of our customers. Our three-pronged focus will be on pursuing growth selectively in order to protect our returns on equity, improved customer experience, and enhanced digital capabilities. Our customers are our ultimate priority, and we intend to strategically consolidate our businesses or our business operations to deliver high-quality and affordable banking solutions that meet their needs. We will continue to enable the growth and development of our people. As I said earlier, our people are our strengths, and they are a key enabler to help us deliver on our promise to clients and meet our strategic business objectives. Our employee value proposition continues to be enhanced to reflect this, and we continue to work towards improving the offering. We are mindful of the evolution of the banking sector and banking trends that are shaping the financial services sector. Transformation in the digital era has been further accelerated by the pandemic as customers seek greater convenience as they transact. We will continue to invest in new technology to develop robust and attractive digital systems with analytical capabilities and augmented intelligence, which can generate levels of customer engagement and operational efficiency that were inconceivable before. As the nation works towards economic recovery following the socio-economic impact of the pandemic, the banking sector remains essential in providing financing to the real economy and to facilitate trade, commerce, and capital formulation for business growth. We intend to grow private sector credit above prior year's cycle average, with specific focus on trade, agriculture, manufacturing, and SME financing. Environmental, social, and governance issues, ESG reporting, has become even more critical for us at Absa as sustainability becomes ever more important. We are more attuned to the need to consider the sustainability of our operations from an environmental and social impact perspective, and this will also be applied to the operations of the businesses that we lend to. We remain committed to delivering sustainable growth within the communities in which we operate for long-term value creation. We see ourselves as playing a leading role in the 4 priorities outlined in our citizenship agenda that I alluded to earlier, that include education and skills development and inclusive financing. Ladies and gentlemen, at this juncture, I'd like to thank you once again for attending this briefing. And with those remarks, I look forward to taking any questions or clarifications around the presentations that Michael and I and the chair have made this morning. Thank you once again for your attendance, and I'll hand over to the Director of Programs.
Thank you very much, Mumba and Michael. Give them another round of applause. And Mumba, thank you for the new title. I'll be adding that to my current title. I hope it comes with an increase in pay. We'll now open it up to questions to the journalists. Of course, Mumba and Michael will take the questions, but we have the entire management team present. So feel free. If you have a question, put up your hand. You'll introduce yourself, and then we'll take it from there.
Yes, thank you, Absa, for the good results. I've seen a lot of changes, like you highlighted, especially on issues of provision. But I wanted you to make a comparison on in terms of contribution to the bottom line when we look at interest income vis-a-vis non-interest income. How did that perform? And if you could take us through the issue of taxation, how much did you pay on the profits before tax? Thank you.
Thank you. We'll get a couple more as Mumba and Michael collect their thoughts.
And Helen, could I request that colleagues introduce themselves so that for the benefit of people that don't know them, they also get an opportunity to know the colleagues they're talking to.
Okay, so that you wouldn't even know who to ask which question. Again.
Yes, good morning. My name is Edward Ochen, and I'm the head of legal, the bank, and the company secretary. Thank you very much. Thank you.
Good morning. My name is Musa Jallo. I'm the head of retail. Thank you.
Good morning. My name is Herbert Olo. I'm the head of operations and IT.
Good morning. Albert Biaruhanga, Business Banking Director.
David was trying to look away.
Good morning. I'm David Wandera, Head of Financial Markets and Executive Director.
Good morning. I'm Susan Akello. I'm the Acting Chief Risk Officer.
Yeah, good morning. I'm Dixon Agaba. I'm the Chief Internal Auditor.
Hi, good morning, everyone. My name is Guy Kimbo Alutaya, and I'm the Head of Credit.
Good morning, everyone. I'm called Vincent Otem, Acting Corporate Director.
Good morning, everyone. Emmanuel Chiveru. I'm the Financial Controller.
That's the part of the management team present. We can carry on with the questions.
Morning, my name is Ruth Adong. I work with Sanyo and the K Financial. So, in your presentation, you said about 1.1 trillion was given out in loans to the sectors. If you could have a sector breakdown of who got what and which sectors are performing better than the other, or performance of the sectors in regard. Okay, I'll come back after that.
Would you like to take those two? Or distribute them as you see fit?
Michael, speak to the first, I don't know if it's 2 or 3 questions around NII, NFI, and taxation. And I'll cover the next one from Ruth around which sectors contributed to our lending portfolio.
Okay, thank you very much. Thank you very much. Yeah, so I did share a slide, and I was just trying to bring it up here. So when you look at our income, yes, 15% growth. Net interest income or interest income was growing at 18%. NFI is growing at NFI is growing at 18%. Net interest income is growing at about 14%. So what does that mean? When the economy opened up, we could see more transactions, as in people were choosing to invest further, because we did see a lot of liquidity stuck in the accounts as people waited to see more travel, more investments, the economy ordering for goods from China and the rest of the world. And as a result, you see more transactions happening in that space. And that's a reflection. The other bit is the fact that because you've got a lot of liquidity and the demand on that side is not coming through, you are prompted to invest in treasury bills. And in a sense, you're lending to government. So if you're lending to government, there's also incentive, which more or less speaks to the question on tax that you talked about. I think subsequently, the Ministry of Finance reduced the tax rates to 10% for those who are investing in longer dated bonds. As a result, we saw our effective tax rate reducing to about 21.4% on the numbers, 21.2%. So that's a reflection of the balance. So you are paying interest of 30% on the borrowing to customers, and it's tiered 20 to 10% across if the surplus is invested in bonds, in government securities. But the fundamentals are that we have seen the economy open up. The demand is picking up for credit, so we should be able to see even better returns as we lend to customers and businesses across the economy. I hope I've answered that. Thank you.
I'm not sure if colleague wanted the actual quantum. I don't know.
Yeah. Let me suggest that for the sectorial analysis, we shall provide a detail. We shall provide that report, and we do have the numbers around, such that you have visibility of that. But we have seen generally that the retail space continue to borrow, and in terms of trying to ensure that they keep afloat. I think construction has not ended. We've seen buildings come up throughout COVID. So those are some of the thriving sectors that we've been able to see. But in terms of the specific numbers, that detail will be provided. And yeah, we'll get more details to that. Thank you.
Yeah, thanks, Michael. I think in addition to the sectors alluded to by Michael, obviously manufacturing and trade were other sectors that we saw, some, increased activity in as far as the lending portfolio was concerned for 2021.
Yes, my name is Biwal. I am a citizen of the internet. I've got two quick questions. One, I know that in 2019, Absa set up that SME thing, the training for SMEs. And around 2020, you partnered with World Bank to skill a number of SMEs. I just want to know what the update is regarding that. Has there been any progress? Is there any good news? And then two, I want to hear a bit about the chatbot. I heard something about the chatbot. I think it's called Abi or something like that. I know that Ugandans are not very friendly with chatbots. They like to speak to individuals and human beings. What's the progress? Is there any good news? Is it so? Thank you.
Thank you. My name is Charles Boji. I am the producer, Man and Market Show on NTV. About three questions. One is on non-performing loans. According to the financials presented, we're seeing that positive outlook there. There's been really a reduction in the non-performing loans. So if you can give us an idea of one, the most affected sectors before, the previous year, and what has happened? Are we seeing them really emerging out of, economic doldrums now that you're having that reduction, the reverse on that particular aspect? Then going forward, what are you looking at? What is likely to drive growth this financial year? Of course, against the background of fairly high prices, in a number of areas, and of course, fuel prices and all these economic risks that I think Mumba alluded to. Where are the anchors for growth going forward?
Thanks, Boji. I think, Mumba, can we take those? He has asked three of them all at once, and there was another one, so I think that gives us quite a number to tackle.
Okay, so I'll start with the first two. I'll have Albert, Business Banking Director, speak to the SME Academy and training and the progress we're making. Musa will speak to Absa Abi and the progress we're making there. On the NPLs, I'll have our credit director, Guy Lutaya, speak to that in terms of the key drivers in 2020 versus 2021. And then I will speak to the growth outlook for 2022.
Thank you very much, the citizen of the internet. That's a new one, it's a good one. So you're right, in 2019, we came up with what we called the SME Academy. And the whole reason why we came up with the SME Academy was really to support our clients and prospective clients to make sure that when we lend them money, they can put it to good use. So it focuses on key areas of governance, of proper record keeping, and a host of so many other things. So Fast Track in 2020, and you're right, we partnered with with the IFC to run a couple of training cohorts. So the one that we ran jointly with IFC, we trained over 220 SMEs. So there are about 220 participants. And the whole reason why we did it is, you will understand that during COVID, a couple of businesses were struggling. So we thought as a bank, how can we, come through and support these businesses to really bring their possibilities to life. So that's what we did in 2020. And then in 2021, again, we ran another cohort in partnership with GIZ. Over 60 entities participated. And in fact, these graduated, in Feb. We ran a graduation ceremony, at Mestil where, it was well covered by the media. So, it goes a long way to show, what we are doing in terms of supporting the businesses, but also ensuring that when we put money when we lend money to these SMEs, they can put it to very good use to drive growth in their businesses. I hope that answers your question. Thank you.
Thank you once again, the citizen of the internet. I'm not surprised that you figured out ABI, which is our 24/7 personal banking platform. The progress has been quite good. For those who don't know, you can get into, you can access our chatbot. You can go to WhatsApp, and using that platform, you can access ABI. ABI will be able to give you information regarding opening an account. It can help you to do transactions. This is a support platform that from our customers we have come to really appreciate, because instead of going to the branch or calling the call center, you can access the chat box and you can easily get answers to some of the very pressing questions that you may have. So happy to note, the citizen of the internet, that you have access. I hope you have actually accessed ABI itself, but for those who haven't done it so far, please try it. It's very simple and it's very easy. Thank you very much. I hope that helps. Thanks.
Charles, thank you for that question and that observation. So definitely when you see the loan loss rate drop by over 300, almost 300 basis points, there must be a sector, at play in terms of, the composition. So what we've seen, from 2020 to 2021, there are three primary sectors that we've seen improvement, which caused us, the high NPLs in 2020. So the first one was construction. The second one was real estate, and then the third one was energy. So we've started seeing those in 2021 come on stream. Most of them actually, have made repayments or making efforts actually, pay off their debts, and that's why we are seeing, the good loan loss rate that we've seen in 2021. Thank you.
I think there was a question on the sectors that we see driving growth. Obviously, the services sector, I think, is one of them. As we have seen a relaxation in entry requirements from a COVID test perspective, as you enter through Entebbe, we do expect tourism to rebound in 2022. Manufacturing is another sector that we are seeing a lot of activity. Trade and construction are other sectors that we are seeing as, areas that are going to stimulate growth in 2022, notwithstanding any risks that may arise according to, as a consequence of the disruptions that may be caused by the war in Ukraine and Russia. So those are some of the sectors where we are seeing activity, and that is what is driving up demand in credit as we go into the later part of 2022.
Okay, we'll take, I guess, the last couple of questions from the three. Since you had your shot first, we'll come to you last, if that's okay. Thank you. You're very generous, but I'll start here. I'm the program director.
Okay. Martin Luther is my name. I always cause him pain, but that pain makes people to love him so much, by the way. People like your comments, those comments. They cause pain, but they like you for those comments you make. So, all right, now let's go to the factors. Anyway, first remind me, I've forgotten something here. 110 from what? I've forgotten, I'm struggling. Just help me. 41. Okay, yeah, it is a big boom. Okay. Now I got to. What was the writing of the bad debt this time? 50, 100? How much did you write off? I would like to get that very clearly. And then also, when you mentioned something here which is disturbing me still, and that is, okay, Mumba has talked about it. We have the services sector, tourism, manufacturing, trade. What is the problem with agriculture? Are they running away? I thought when COVID was there and then people ran away from Kampala and all other towns and then went to village and begin farming. What's happening with agriculture? It is not featuring here. What's happening? Are you abandoning it? And then when you look at again the yes, he mentioned something about three sectors of banking, retail, corporate. The other one is what? I've forgotten that. Which one is really picking up properly? Is it retail or corporate? There's something there withering, something somewhere there. People are asking, talking about it. I don't know what is the problem there. Then the question of, I wrote them here. Let me see them. I wrote them 19.8, 18.8, 17.8, 17.0, 19.0, 16.5, 16.5. That's where you are now. Okay, we are now 6.5 today. I don't know what is going to happen. Shall we continue going down from 16.5 to maybe 10 or 15? Where are we going? I don't know. Today they might increase or they will still leave it there. I know there is a monetary policy coming soon today. Then when we look at the cost to the income ratio, very nice, 58, 67, very nice. What really contributed to this really? Shall we? And you mentioned something on the outlook. Something is also missing on the outlook again. When you look at the whole performance, the real economy, now when we are seeing the Ukraine, and you mentioned something which I discussed today anyway, but still I will discuss. I discussed it in the newspaper about the inflation and the wheat prices, the oil prices. How serious do you see the problem of inflation impacting on the credit growth in the banking sector? And also when you look at the problem of wheat, that goes to the problem of pricing of products, of goods. Won't that also affect maybe those who import it and sell it into what we call now processed food, that is the bread? Maybe the bread would go up, don't you think so? The bread, the price of the bread, something like that. Sorry, I've mentioned so many things.
Thank you. My name is Sierra Cabona. I write for the East African. I needed some bit of clarity on issues of taxation on government securities. You said there was a reduction on taxation, which saw long term go to 10%. What's the rate that is paid for on government securities? The long-term, short-term government securities. I wanted you also to help me understand whether Kenya, Tanzania, Rwanda, and Burundi are charging the same. Maybe also the probable impact. Does it on your appetites to put money in government securities? Thank you very much.
Yes, I think I forgot to introduce myself last time. My name is Ali Twaha and I work with New Vision. Just one, in 2019, 2020, you had proposed to pay your shareholders? Since you're not a listed company, we don't know some of those issues, but central bank had put a directive on to stop paying some of those discretionary payments to shareholders. I don't know, did you pay them in 2019, 2020? Were those proposals approved? I don't know what you proposed in 2021, but I think the last 2019, 2020 was about 20 billion. Was that approved? Thank you.
Okay, that's the final one, I guess.
Hi, Ruth again. So you talked about 83.4% of your transactions formed out of bank. Does this have any connection with reduced cost of doing business, and will this be reflected in the interest rate reduction? Just asking. But also the other thing is you talk about ESG and its importance, and the next set of businesses you want to take on, or the businesses you want to interact with, you also want them to have that element. ESG is it's a fairly new concept in banking, in the financial industry. So what standard metrics do you have for the businesses you will be looking to take on? What standard ESG metrics do you have set up and that you'll be looking for in the businesses you'll be doing business with?
Thank you. Mumba, over to you. After those questions, we'll call it to close.
Okay, thank you very much. Lots of questions. So what I'll do is I'll speak to the ones that I will cover and then distribute the others to respective colleagues that are present that can provide better context than I. I think agriculture, yes, it is a priority area. So if you noted my comments carefully, I said some of the sectors that will drive growth. So some of means a subset of the whole. So agric does remain quite a critical sector that we will participate in, and we do participate quite significantly in the secondary agriculture space. So that does, I think from an industry perspective, it should be the fourth largest contributor to credit in the industry after areas such as construction, personal loans, and trade. So yes, it remains a key sector. Starting with Martin Luther, I think he spoke about profitability, bad debts. I think that's what I was about to pick up, and interest rates. I think that Michael will be able to provide greater context around that. Kabona from East Africans spoke about taxation of government securities. He wanted a distinction between what is the rate that is applicable in terms of withholding tax on short-term securities versus long-term securities. I think Michael will be able to ably comment on that. There was a comment as well, I think again by Martin Luther, in terms of the impact on inflation on interest rates. David can speak to that, impact on inflation and interest rates, what our outlook is, and how this would impact credit growth. Naturally, inflation being an input to the determinant of interest rates, when it goes a certain direction, you expect interest rates to either rise or fall in relation to what is happening on the interest rate. But David will articulate that better and just give a flavor in terms of what that would mean from a credit growth perspective. I think Kabona also spoke about the rates that we are charging on the withholding tax rates in Uganda. How do they compare to other East African countries? I think between Michael and David, you should be able to cover that. And then Ali spoke about proposed dividends. I think that's another question for the CFO. The 2019 dividend, was it paid? Are we proposing any dividend for 2021? I think my recollection is from the proposed dividend for 2021. This has not yet been approved. The approval guidelines that you referred to are still in place. Before any dividend can be paid or any discretionary payment can be made, that requires approval from the regulator. And at this stage, unless there is latest information, we have not yet received that go-ahead from the regulator, but you will see in the draft financial statements that there should be a figure there that was proposed. Is it 50 billion? We have 50 billion in there, but subject to approval. Yeah.
That was paid.
2020 was paid, right?
That was paid.
Yeah. Okay. Right. So those were some of the comments, and then from our good lady, there was an issue of 83% of transactions being done through electronic channels. Do we see benefits coming through in terms of efficiency? And the answer to that is yes. If you see the financials that Michael presented, you will note that the costs was, almost flat at around 212 billion year on year. That speaks to some of the efficiencies we are beginning to see through our investment in technology. So that's from an operations perspective. Have we, will that result in a reduction in interest rates? No, it won't directly result into that. What typically happens is, as you determine your lending rate, you will look at your cost of doing operations over a period of time. And when you look at our cost to income ratios, they're still relatively high. 58% versus, I think, most efficient banks that would generally operate around 45 to 50%. So cost of doing business remains relatively high, and the impact of the efficiencies realized so far will not result in a reduction, a direct reduction in interest rates. But the other factor that we do respond to, if you saw our publication, you did note that one that we react to immediately is the CBR rate. So depending on whether it goes up or down, we respond immediately to pass on that benefit to our customers. ESG, Guy, you probably speak to that in terms of the process that we're following to ensure that we have ESG compliance. But typically what happens within the credit space is we have a sustainability champion that will look at various parameters in terms of compliance with environmental guidelines, depending on the sector and any emissions that may have to the earth. We will have to get reports that show that environmental impact assessments have been done, and whatever you are doing is in compliance with what NEMA prescribes. So that would typically be the approach, but I'll allow Guy at some point to provide further context on that. So taking it from the top, Michael, you can tackle your set of questions, then David, and then Guy can speak to the last point around ESG.
Thank you very much. Martin, thank you for your questions. We usually have a lengthy discussion with Martin, and from that conversation of questions, I'll definitely have more clarification to give. But let me take it. You asked about bad debts. The publication we are giving will show a write-off of 20 billion shillings. And that's what's expected from a central bank perspective, because you're supposed to write off after 1 year. That does not mean that we have forgotten the debt. We still follow through through our collectors and the lawyers, and they come through. But 20 billion shillings to be specific. I think you did ask about which sector was driving that growth. Fundamentally, we've seen good performance from the corporate, what I will call the CIB space, corporate and investment banking, and that has primarily driven our performance in 2021. However, we've also seen pickup as we move towards the end of the year. We did see a pickup from both business banking and retail as the economy opened. We were able to see that. Interest rates, I did share a graph that was showing interest rates going down. I should say that we more or less, not factors remaining constant, we more or less at the lowest end we have seen in terms of CBR. So that's the expectation. There's a propensity that they may start ticking up. As inflation picks up, you need to start ticking up the CBR to just try and take out all the liquidity in the market. So that's what we are seeing. And I think even on the foreign currency side, if you're following the Fed, that is also picking up, because January 2021 had a low interest rate regime. And that means more pressure on our margins, but we're still able to follow through with the transactions that we are coming through. There was a question on cost to income ratio, primarily driven by the fact that we have managed our costs well. The separation costs are more or less out. and our income has grown tremendously as a result. So that's driven by those two. To answer the question, yes, income, and I think it's both ways. Income is going up, costs are being managed very well. There was a question, and if I've missed anything up, we can have the conversation after. There was a question on dividend. I think I've answered. The 20 billion was paid up. But let me say that the fact that we are talking about 110 billion shillings and we are asking to pay 50 billion to the shareholder fundamentally means that we are leaving behind money for investment, for further growth in the business. I think for me that's the key message. If you look at our profit numbers, PAT, profit after tax, vis-a-vis what we are proposing to send to the shareholder, it clearly shows that they want to see the business grow. They want to ensure that our appetite for bigger deals in the economy is there. And for me, that's the key message. But the proposals for the dividend follow through central bank. And that's how we get the approvals to make the payments. The bit on Gavis, government bonds, David is going to tackle the bit around the region. But just to clarify, anything above 10 years is 10%, and I'm talking about bonds. Anything below that is 20%. But David will provide more clarity. Maybe just one more comment on the cost of business that Ruth raised. I think, yes, over time, we do expect that the cost of business will go down. But for now, we are still investing in the chat box you're hearing and better systems that are coming through. We need to ensure that the brand is up to date with the times, and that costs money. So we may be channeling investments into this area, but we do believe that over time, that cost of doing business will generally go down. Thank you. I'll hand over to David.
Thank you, Michael. Just to comment on the treasury bills, bonds, tax rates. Currently in East Africa, I think Uganda is the highest, with the split between 10 and 20 for 10-year and above bonds and 20 for anything below. In Kenya, it's tiered 10% for those above 10 years, 15% for those in the shorter tenor. For Tanzania, there are actually significant amount or tenors that are actually tax-free. So when it comes to bonds and taxes on bonds, that's how we rank in East Africa. There was a question on interest rates, right? And the outlook and what that would mean for lending, for credit. Obviously, because of what is happening, and I think even the Deputy Governor alluded to it last month in one of the events we held, there are upside risks to inflation right now on the back of what is happening. So naturally, if there's a rise in inflation in the global economies or the more developed countries like the US and Europe, that results in what is called a flight to quality. And we see dollars and foreign currency flow to the more developed countries, and that naturally could create risks to increases in inflation in our local economies. That could also be compounded by what we are seeing. If you're seeing in the press a lot that we have seen rising fuel prices, rising commodity prices, those create risks to inflation. And that could result in a change of stance by Bank of Uganda in trying to combat that inflation by tightening, which means probably increasing the CBR, and the corresponding effect of that would be that generally interest rates could increase as a result. Not that it's a certainty, but that is a possibility. So that is basically how the cycle of interest rates will probably play out. And right now we are seeing globally risks to inflation and interest rates as a result of global disruptions to the supply chain. That means not enough goods going around, and also increased basic commodities, fuel, which feeds into all the other commodities, creating inflation. So those are the risks that are there. We can't say for sure what is going to happen, but each one feeds into the other. Inflation feeds into monetary tightening through CBR feeds into increased interest rates. Yeah, thank you.
Yeah, Ruth, on your question of ESG, ESG is a very topical issue right now. I think if you go back to COP26 in Scotland last year, where all the world leaders basically met and they were discussing sustainability and also ESG. And in our context, it's fairly new, like you've said, but Absa has actually embraced it. So and we have embraced it in two ways. We do have sustainability policies and frameworks in place. And we are also signed on to what we call a MEGA guarantee, Absa Uganda. So MEGA is an arm of the World Bank, which is Multilateral Investment Guarantee Agency, right? And where we have certain obligations, under ESG. So just to give you briefly a flavor of the framework, I do have a sustainability person who sits in my team, in the credit team. And in terms of the framework, every credit funding that is above $10 million has to go through an ESG analysis. And what do we do there? We look at, for example, if it's a project finance, do you have the relevant NEMA certificates, and approvals in terms of impact, environmental impact assessment, reports. We look at your HR policies. Do you use forced labor? Do you use child labor? Things like that. So we actually do have a whole checklist that we take through those credits to ensure that they are ESG compliant. So just to give you a flavor of what we are doing in that space. Thank you. No, it's only for exposures that are above $10 million. Otherwise, it will become too onerous for us, for example, the SMEs, right? So we can't go and do an ESG check on all, and we basically give out, thousands, a month. So we basically, kind of cherry pick. And those are the projects that have the highest impact to degrade the economy. So that's basically where we cut off. Thank you.
Okay, thank you very much to all the participants. Mumba and Michael, thank you so much. I didn't expect it to be this hot, but the questions in quite a number, which shows that you've been very engaging to the audience. So thank you very much. Give them another round of applause. We've come to the end of the session, but before I close, allow me to give a vote of thanks to the members that have put this together, the finance team present, and of course, the marketing team. Emmanuel, stand up. We should clap for you. I know Lillian, I don't know if Lillian was able to come. She wasn't, but please pass on our thanks to her. Robina and team, thank you so much for the work that you have done putting this together. We've come to the end. For the members of the press that want one-on-one interviews, the management team is here, and also the presenters for today are here. Just get in touch with Robina or myself. We should be able to do that. Thanks again for coming, and we wish you a great day.
Whoever you're doing it for, we'll help you get it done. Simply. That's Africanacity. That's Absa.
Shop online, get free swipes, and enjoy greater security with a card that turns banking on its head. That's Africanacity. That's Absa.
Signing up for an Absa Flexi account gives you better control of your money with benefits that will let you be in charge of your finances. Great benefits such as no more monthly fees, as you can now pay as you transact. Fixed low interest rates on unsecured personal loans. Plus, you can enjoy great rewards when you use your Vertical Absa card. To sign up for an Absa Flexi account, simply visit your nearest Absa branch, making sure you bring your national ID, and we'll sign you up for your Absa Flexi account, allowing you to start taking control of your money and your life.
Whoever you're doing it for, we'll help you get it done. Simply. That's Africanacity. That's Absa.
Shop online.
Please make those payments and take dinner out the freezer. Enjoy your day off.
Hey.
How was your day?
Great.
Did you pay the bills?
Abby did it.
And the plumber?
Abby did it.
Send money to your mom?
Abby did it.
Who's Abby?
Abby.
Bank on WhatsApp with Abby, your 24/7 digital personal banker. Another digital innovation that gets things done.
Did you take dinner out the freezer?